Hey,
Hope everybody's doing well. Let me know if you can hear me,
yep.
because I can't hear none of y'all. Okay, there we go. Can y'all guys hear me?
Yo.
Hey, what's going on?
Good man. How are you?
Doing pretty good.
Got a good few people in today. Not so bad.
Yeah, we got some new peoples.
Yeah, there was a good few that actually joined this week, eh?
Say that one more time.
There's a good few people joined this week.
Exactly. We love seeing new faces, guys. My computer is doing today. I'm trying to update my desktop computer, and it is doing weird stuff. It is not even want to. I got all kinds of stuff going on right now. But now my desktop computer does not want to allow me to log in. It is acting so weird. I think I need to get a new keyboard because this one's doing weird stuff. Cool. All right. Well, everybody, thank y'all so much for joining in on this office hours. Just to remind everybody, this is our weekly Precision Markets office hours, where we focus on answering the questions that you have, specifically anything that you see within the content-wise concepts, even trades that you want us to explain. So it's really 30 minutes to really help you get a visual on a lot of things that y'all ask questions about and make sure that you get answers for. So we got Nathan and myself, your two precision market coaches. We're going to be able to be there to answer these questions. The format of how we do these things is that I try to get people to ask questions within the chat, but I also will keep in mind during the week, we've got questions that people ask in the questions within our Discord group, and we'll go and answer those. It's 30 minutes. We'll run until the 30-minute mark of the hour, and then we'll have these next week. If there's things that we don't get to answer in a level of detail that you need, I highly recommend that you book one-on-one coaching time with either Nathan, Rob, or myself so we can further explain those concepts, or just hold those questions until inside the chat or until next week's office hours. So everyone, please go ahead and submit your questions within the chat. I do got one lingering question that has been asked multiple times that I'm going to make sure to explain first, but I want to go ahead and get people to answer things in the chat. So go ahead and ask y'all's questions. Don't be shy, y'all.
Yeah, for all the new people who joined as well, like if there's anything in the course or anything that's like bothering you that you just don't get, or maybe something hasn't clicked, feel free to ask us.
We're going to leave a couple minutes. We're just going to wait for y'all to see if y'all ask any questions.
Now's your time to shine, guys.
That's weird. Well, okay, guys. Okay. There's been one question. Oh, wait. Perfect.
We got two.
All right.
Okay.
So our first question is, do you guys use the custom indicators that you offer? And if so, how would you use them?
Yeah, I think you should answer that one, Brian.
Okay.
You're the one that you use them, don't you, most?
Yeah. So, I mean, they definitely, I think, I really do think we'll also record a video on this because I've seen this question now before. So give me 1 second, guys. I've got to get my window to pop up because my laptop is a little slow today.
I think one big question about them indicators too is like, how do you use them in regards to like the colors that they give? You know, the little lines, the orange lines, the blue lines, the green lines. That's something that I've seen quite a lot in the chat.
Oh yeah. So I'll give y'all a quick little rundown. So I do use another indicator that it's not custom, it's already built in. It's called average true range. It essentially helps me to know the volatility of price and know, like, for instance, what is the average size of a candle? It helped me with stop loss placement. And then I also use volume, which is very important. But first and foremost, let me just start with this market structure. I don't really want to see it on this time frame either. So the market structure indicator is the most important one, in my opinion, because it allows me to be able to understand exactly what is our direction, what is our trend. But it doesn't give me exactly our directional bias, but it definitely helps us to see what is the trend. And that's very important. So it's the very first and most important indicator that I think that's there. The second one that we have is our precision entry and precision divergence, which to me is very important. The reason why is it helps me be able to see things. So let me go real quick. Say, for instance, I'm looking here at NASDAQ. This is a demand zone. It meets my requirements. It broke something, strong move, quick move, big body candles and imbalance. So that's just a rough primer on 3 things I look for in POI. Now I'm going to go down to the 1 minute and say we're going in and look for entry. I see a couple of things here that are important. This is our precision divergence showing us divergence lines. And with the precision entry, it shows entry. Now, what y'all didn't see is that internally, this was an internal chalk. So you possibly could have used this for entry. And it was supported by the fact that we have divergence as a signal. Oh, second, wrong tool. Divergence as a signal. You put your entry in here. Let's say, for instance, y'all decide to put a limit. That's somewhere like right here. You cover your stop and you cover the stop and whatever your spread was. So we're gonna say a little bit more. Cover this low a little bit, and then boom, you would have had a trade that easily could have gone off into a 1 to 5, and quite much more. And the whole thing was supported by having divergence. It broke something, it comes back into it, and we're using this. And you'll notice that we'll have, I don't know if you can see it, but you'll have these little green dots. So divergence is a signal that helps you to understand if price is slowing down. And what that means is that while this price was making lower points, RSI on the bottom was making higher points. And then it had our cross for the moving average. And when that cross happens, that green dot, that's a good spot sometimes for entry, which in our case would have been a great entry spot. So that's the 2 indicators that we offer that we use. And that's kind of like a good way to use them. Definitely with all things back tests. So you want to back test so that you understand your operation of how to use those things. But one is for entry signals. The other one is helping you to figure out your directional bias, which is our trend bias, which is most important. So hopefully that answers your question on how to use those. But we'll definitely get a video that will record it so that we can kind of further explain, because I think that is something that needs to be further explained and put in the course.
Yeah, definitely. I think as well with the indicator, it's just an extra confidence, don't take it as gospel either, because you get a lot of false signals as well. So make sure that the signal you're getting is on top of all the things that are already in your plan. So don't just buy it, add it in as an extra confidence.
Yep. All right. So the same question we have. So if we must find a 15-minute supply, oh boy, the question's coming in. I love it. So we find a 15-minute supply demand zone. We must enter it on the 1 minute time frame. Real close. Now, we're going down to M1 to get a tighter entry. So just keep in mind, guys, I'm gonna show y'all on the quick whiteboard that when price comes in, we're expecting price to come in, for instance, maybe into this demand, right? So I'm just going to put D for demand. And this, let's say this is a 15M, right? Good thing I'm not an artist because this ain't no Picasso. When price comes down into it, you could always enter right here on the 15-minute and put your stop behind here. But what happens is you probably get maybe like, for instance, a 1 to 3 or even less risk to reward just by doing it. Man, I was horrible at this. A 1 to Jesus.
Look, you're a better artist than me.
Yeah, I don't know at this point. I'm kind of struggling today. All right, can we get a 3? No, we can't, but I'm gonna take that. So I need to get on my iPad so I can actually draw with a sense of goodness. There we go. There we go. Feels so much better. All right. So I'm gonna draw that 3 in red. So essentially between here and here, like for instance, we might get like a 1 to 3, right? But if you can enter in down here, and let's say, for instance, have your entry here and your stop here, and that whole little leg, that could be maybe a 1 to 10 risk to reward, guys. So that's the difference of what you're seeing, is that by entering on that 1 minute time frame, you're able to tighten up that stop loss and extract more profit from the same move. I hope that makes sense. So don't feel like you have to, guys, enter in on M1, because you can definitely enter in on other time frames. It doesn't mean M1. M1 just helps you to get a slightly tighter slightly tighter like entry, and that's the key. All right, let's see. Can you share your market structure settings? Rob already has shared the structure ones that they use. I have a little bit more of a custom version than what y'all have. So I have some things that y'all don't have. But if you follow, you know, what things from the baseline that Rob has shared, you'll start out good, but you really need to test it for your own and figure out your own settings that work best for you.
Default setting to be quite good with Euro USD, right?
I'll say it one more time, Nathan.
Default settings for Euro USD seem to work quite well with the indicator.
Mm-hmm. Yeah, they definitely do. And then, you know, you're gonna figure out your own. I mean, those times he puts are mostly for FX pairs, but he's still doing testing on like gold and NASDAQ and such like that. But each person needs to do their own due diligence to make sure that they work. You may customize and tweak it just a little bit, and you know that's what works for you. So keep that in mind, guys. Higher time frame bias, 1 hour, entry 5 minute. Is that okay, or do you really need 3 time frames to understand structure? For example, 4 hour. No, you don't. You can make a program work with 2 time frames. You also can have it where, you know, you do 3 time frames, but it's most important that you have a directional bias. I think the time frame is supposed to be used. Hold on a second. Let me do another whiteboard real quick. And this time I'm going to actually use my Apple Pencil. All right. So essentially, if you do a 3 time frame system, and then I'm going to show over here a 2 time frame system, you have certain things. You're going to have your higher time frame, which is direction bias, which that carries over to your second time frame. You still have the higher time frame for directional bias. Then you have your middle time frame, which is for your entries, well, entry points. And then you have your execution time frame, which is simply for execution. But what ends up happening is on a 2 time frame system, this becomes your entry time frame, which goes for entry points, and execution. but you just have to test it. So it would be the same example of, for instance, if you used 4 hour for your higher time frame and 15 minutes for your middle time frame, instead of going down to M1, you would just execute M15. And so there's all kind of different time frame pairings that you can do that can really kind of balance those. I like using 4 hour 15 M1 seconds or 1 hour or daily 1 hour 5 minute 1 minute sometimes of entry, or you could use 1 hour 5 minute in seconds. I've seen people who've also done that too. So you just have to test the system to make it work, but you definitely can do that. All right, Abdul, what will you guys do if you see a move like we had today on EU? I mean, will you wait for the lower extreme demand for that huge move to be mitigated and take the above zones as inducement, or would you follow a market structure like high breaks, higher high forms, etc.? Then will you take the new small leg and take the new zone or trade off of that? Let's see. Nathan, you want to answer this one?
Yeah. So, well, for me, when it comes to, I can't. If you want to turn on share screening, Brian, maybe I'll just share the chart.
Yeah, sorry, I'm trying to figure out how to turn it off. So you can share the screen. Oh, there we go. There we go. All right, now you can share your screen.
Awesome. Awesome. Everyone can see the screen, yeah?
Yes, sir.
Sweet. Well, I guess this is the move here he was talking about. This, or maybe it was actually a second move, because there was 2 pumps here. We had this move to the upside and also this one here. For me, when it comes to this, like, I was actually waiting for a trade off this zone down here. But the second this move came and it happened, I'm just looking at what zone do I have to trade from? And that's this. I need inducement before my zone. So if I don't get what I need before the entry, I'm not going to take that. So for me, I'm not able to take any trade here, especially with this one here. I have this demand zone here marked. There's no trade. Price doesn't come back. There's no inducement created above it. So when it comes to pumps like that, I kind of get left behind in that sort of move. So yeah, like I'm kind of following the higher highs, the higher lows, but just not getting in on price as it moves. I'm waiting for a new market structure, or else zones to be mitigated that are unmitigated.
Did that help?
Answer your question? Did that help, Abdul? Yeah. Awesome. Yeah. But that's just the way I trade. I know some people would still try to jump in on some of these moves, maybe try to get a little pullback out of things. But for me, I'm sitting here waiting. You know what I mean, mate? So they're a little bit higher probability. Plus, you won't be, chasing price and getting wicked out or knocked out of it. Let the move happen. We have some price action created up here. Just sit back, wait, set an alert, and trade from the higher time frame POIs, man. Simple as that. Awesome.
Good stuff. Good stuff. All right. Got a question from Toby. Can you show an example of a tighter entry? Yeah, sure. Give me 1 second. I gotta find my window. Oh, there it is. All right. So I'm gonna kind of revisit back the question that Aisha had also about higher time frame bias. So I'm gonna give y'all an example, right? Let's see, I start the day, I wake up and I come to the 4 hour and I say, okay, I know that, for instance, NASDAQ is going up. So my higher time frame bias is to buy. I come down to the 15 minute and I see this entry, right? I see that it breaks next to this POI, it comes back, it taps into the spot, and then price decides that it can take off. Now, the entry that I showed y'all was a 1 minute entry, right? This would have been a 1 to 5 risk reward, would have taken most of the day, would have eventually got there. This would be an example of a tight entry. But if I didn't go down one more time frame, I just stayed on the 15 minute, I could have entered in maybe after this candle right here, My stop would have been specifically behind this demand zone. So it's going to be back here. And what y'all seeing is that the same move could have been a 1 to 1.6 risk to reward. So this is an example. This 1 to 1.6 is an example of a not so tight entry. Whereas if I come down to my, even if I even use the zone, like the limit would have gave me a 1 to almost 4. So you still got more R from the exact same move by going down to the 1 minute time frame. And so kind of to Aisha's question, no, you could have used 2 time frames using 4 hour and 15 minute for your entry. And going back to I'm sorry, I forgot your name. I apologize. Toby's question. The non-tight entry tights you would have gotten is a 1 to 4, maybe would have gotten a 1 to 1.7 risk reward. But if we gone and got even tighter, we were able to extract almost 1.1 to 6 risk reward from the same entry because we went down to a smaller time frame. So we go down to this 1 minute time frame. We saw, for instance, that chalk, and we see this entry, and we don't have a stop loss that's as big. So hopefully that helps you to make sense of why I'm going down to the M1 helps give you a tighter entry. All right. So good. All right. And Joko, so you don't take a position without inducement.
Yeah, I think that one was for me. That one, I was actually just replying to that. I just wanted to say quickly about that. Like, that's just in my plan, right? If I don't have inducement, I won't take it. But I'm not saying don't take a trade if you don't have inducement. So test it and see if it works for you. All right, man. So just wanted to clear that up. I was literally just typing it.
Awesome. Thank y'all guys for the good questions, and y'all come in today as well. What other questions does anybody have? And I'll answer the last one. Does anybody else have any other questions? If not, I'm gonna answer something that people have been asking me for the last week. Once I find what I'm looking for. Any other questions, guys? Okay, perfect. I found what I'm looking for. All right. Lower time frame doesn't give you multiple chalks and stop you out. How can you predict the entry area on lower time frame? You really can't. Sometimes you have to get tighter on your rules to avoid some of those stop outs. I mean, that's the only thing that you can do. There's no guarantee of if you see this chalk and this chalk and this chalk, it'll work. I mean, everything we do in trading is based upon possibilities. So it might work 90% of the time. It might work 50. It might work 30. I mean, there's no way to better predict it, guys. So all I can say is just get tighter in your rules and what you see, and hopefully that'll prevent you from being stopped out. You got anything you want to add to that, Nathan?
No, you're pretty much spot on with that. You know, the tighter your rules are, the more confidences you look for, you know. I know for me, most recently, I'm looking at V-shaped recovery. So seeing a nice push into the demand zone or supply zone that I'm looking to trade from, a nice push into it, a nice push out of it. That way I can tell, okay, well, the BFIs are here, you know, somebody's moving price. And yeah, so that's kind of cleared some of my chalks up. Yeah, you just have to test, see what works for you, tighten up your rules. And that's really it. You know, the more rules you have, the less trades you'll have, but maybe the better trades you'll have. It really depends. It's all about testing, isn't it, Brian?
It all comes down to testing, guys. I got rid of, I don't do chalks based upon wicks anymore because statistically, I would get stopped out more times than I would have my trades go through. I only use body breaks. If it doesn't break a body, it's not a chalk to me. And the tightening of those rules cut out probably about 50 to 70% of my losing trades. It was that big of a loan. I just saw enough in the data, and the data supported, and I said, okay, I'm not doing this anymore.
Yeah, that's a good one. I like that. For me, most recently, I started trading the edges of structure rather than, anything close to the 50%. I'm trying to get the edges. And that has cut a lot of losses out for me. Also trying to chase price. I used to find myself chasing it, looking for the next POI, the next POI, the next POI. I cut all that out and start trading the edges. Starting to work a bit better too. Are you doing body closes for 15 minutes too?
I do body close and everything. And it largely went back to what I understood about the actual theory behind what wicks are and what bodies actually mean when they close and how they close. And it really goes back to like having a strong candlestick theory. But when I went back to review like my notes on like actual candlestick theory, wick chalks didn't actually even make sense anymore to me. Like I really thought it was like, man, doing this for me actually makes no sense because of just the theory part of what I know. Because everything we do is based upon a theory. So you always gotta go back to theory and understand what the theory is. So
I like it.
What are your market structure settings for NAS? I use a custom version. So Rob posted his initial numbers for NAS, but you need to go test it. I use a different version of market structure than y'all use, but it's based upon the same thing for precision market structure. So I'm not going to share those settings for y'all because it's just going to lead y'all to confusion because y'all don't have everything that I have. But go back into the Discord. Rob posted some numbers for it. I asked Rob to also post them inside the indicator Discord chat so that y'all can have them as like some initial numbers. And that way y'all can be able to use that for your own testing. But go back and test it yourself, definitely. When there's news like today, sometimes I switch to another instrument, maybe that's sheltered from US news, whatnot. Like, is there a pair that's relatively sheltered from USD, maybe a non-USD pair, something better to move into an index or something? The dollar affects a lot of things, but I mean, just look for the pairs that are not. I sometimes will trade CAD JPY. My other pair that I love that's a non-USD is Euro AD. I also love Audi JPY, and I love GBP USD as well. So, I mean, as long as you pick a pair that's not, it doesn't have USD, it's going to be better sheltered from the US dollar, but the US dollar seems to affect most every industry in like some way, largely because US dollar is a reserve currency that's used. So a lot of countries put their reserve money in US dollars. So somehow the US dollar just affects every damn thing, even when it shouldn't. So, but definitely look towards those any pairs with non-USD. I think you'll be okay. All right, guys. We got one more minute. Who wants to be the star of the show and ask the last question? Are the calls recorded? Yes. So as we wrap up, Toby, you get the last question. So congratulations. These calls are recorded. They're going to be up for 48 hours. So that means you have the next 2 days to go through and review this information and make sure that you got everything you could out of it. And don't forget, guys, Thursday, we'll have a Q&A phone call with Rob. So definitely don't miss out for that. Let's give you less stuff to learn and review until that time. And then we'll have our Sunday backtesting session, which I think I'm up this week, and I'm going to choose GBP USD. So don't forget those last 2 calls. If there's anything in here that you need us to go in anything deeper, please do not hesitate to make one-on-one coaching calls with Nathan, Rob, or myself, and we'll be glad to explain it and give you an hour of our time to explain everything in depth. I know 30 minutes is short, but we try to do everything we can to answer as many of y'all's questions so that y'all can be able to kind of be pointing in the right direction. So I'm wishing y'all the best week in trading yet. We got ADP, we got a non-farm payroll on Friday Newswise, ADP tomorrow, which is like a minor, bigger news event, always on the first week of the month. So pay attention to the news events for the latest week, but I'm sure we can finish this out. R is positive, so we will catch y'all in Discord. And thank y'all, everybody, so much for joining. Thank you, Nathan, for answering questions, and thank y'all for being part of this community. We really appreciate y'all and committed to y'all as well.
Thanks, guys.